Convenient to debate motion number 5 on the welfare cap. I call the Chief Secretary to the Treasury, Simon Clarke, to move the motion.
Thank you, Madam Deputy Speaker, and I beg to move the motions that stand in the name of the Chancellor. The Charter for Budget Responsibility is, at its core, about fiscal responsibility. Its existence is born of the belief that stable public finances are the foundation for building a stronger economy for the whole country. Its purpose is to set out the government's approach to managing the nation's finances openly so that the British people know that their money has been handled carefully, and to give us a credible framework for action underpinned by the Office for Budget Responsibility, which the OECD remark is considered by many as a model independent fiscal institution. Given the challenges we currently face, honourable members may reasonably ask whether this is the appropriate time for a debate such as this. But the credibility of the government's fiscal plan is what has allowed us to act as we have and will allow us to act again if we need to. In other words, we are updating the Charter not simply for the sake of it, but to maintain what my right honourable friend the Chancellor at Budget called the path of discipline and responsibility. Madam Deputy Speaker, almost 2 years ago, in the face of the pandemic, we took bold and decisive action to commit unprecedented amounts of public money to support jobs and businesses across the UK. This, including support recently announced in response to the Omicron variant, has helped prevent long-term scarring to the British economy. The IMF praised our impressive, coordinated and extended policy response, while the OBR said that the cost of inaction would have been far higher. The government is proud of the decisions we've taken and that we continue to take, but we are not complacent. The pandemic has left us with the highest level of borrowing since the Second World War, and at nearly 100% of GDP, public debt will reach its highest level since the early 1960s. This is clearly not sustainable over the long term. Madam Deputy Speaker, it is important to keep debt under control for 3 key reasons. First, our level of debt means we're more vulnerable to changes in interest rates and to inflation. In fact, OBR analysis from July found that our sensitivity of debt interest spending to changes in interest rates is almost twice what it was before the pandemic. A single percentage point increase in interest rates and inflation, I will in one moment, would increase annual spending on debt interest by over $20 billion in 24-25, which is more than the entire Home Office budget for that year. I will give way.
But could he comment on what difference, if any, he thinks it makes that a significant proportion of that debt is now owned by the Bank of England, which is 100% owned by the government on behalf of the taxpayers?
Less than 3 minutes.
The Bank of England has obviously helped to underpin our wider response to the crisis that we face, and clearly it does have a bearing on the relative significance of debt, but it would be simply irresponsible to leave ourselves exposed in the manner which we risk being if we fail to constrain the borrowing, which does risk otherwise becoming an unacceptable burden, and which would leave us, as I say, very vulnerable. 1% rise in interest rates would cost the Exchequer £22.8 billion in 2025-2026. That is a meaningful level of exposure and one which we want to take action to address. Yes.
Just maybe to help the Minister also, but would he also not point out the fact that under this government, the Bank of England has reduced the proportion of new debt issuances which are attached to rising inflation rates? So at least in the actions of the Bank of England over the last 2 or 3 years, that exposure has declined.
Yeah, my old friend is absolutely right. And look, we're in a position here where we're certainly not saying that we are in an untenable situation, but we are saying that it's important to meet our fiscal rules, to get debt falling as a percentage of GDP. And I think, as Conservatives, that's something we believe in. It's something which we've won elections for 4 times in the last 12 years on that basis. I think it's important we continue to uphold it.
Will you give way again?
One more time, and then I must make
further to that point of intervention. Isn't it the case he's quoting a gross figure for the impact of a rise in interest rates, and that quite a bit of that would be credited back to the Bank of England, who in turn could pay it back as a dividend to the Treasury?
Chief Secretary.
I think it remains the case that we need to make sure that our debt to GDP ratio is more sustainable than it is at present. And I don't think that's something which colleagues will significantly demur from. I do take the point, obviously, there is an interaction and a relatively circular nature of some of the interactions between the bank and the Exchequer, but nonetheless it is important we control our public debt. Indeed, Madam Deputy Speaker, we were able to respond to the pandemic as comprehensively as we did precisely because of the fiscal space created since 2010. And the fact we faced 2 once-in-a-generation shocks in just over a decade does highlight why we must have the buffers to provide support when it is needed most, and why we must actually build those buffers so that we're ready for any future shocks. Indeed, as the OBR said in their most most recent, fiscal risk report, not an easy one to splutter out, in the absence of perfect foresight, fiscal space may be the single most valuable risk management tool that we have. The third and final reason we need to keep our debt under control is simple. Our public finances are a legacy we leave for future generations, and the decisions we take now will have a material impact on the lives and livelihoods of our grandchildren. They will help or hinder their future ability to tackle long-term challenges, from climate change to an ageing population, or indeed to seize the opportunities that lie ahead. Madam Deputy Speaker, the Charter for Budget Responsibility contains new fiscal rules to guide us back to fiscal sustainability in a fair and responsible way. The rules will ensure that we get debt down over the medium term. They will allow us to deliver a significant uplift in capital investment, in turn driving economic prosperity, but without burdening future generations with borrowing to fund our day-to-day spending. The new rules require that underlying public sector net debt, excluding the impact of the Bank of England, must, as a percentage of GDP, be falling. The current budget must be in balance, which means everyday spending must be paid for through taxation. Both rules must be met by the third year of every forecast period, giving us the flexibility to respond to events in the near term, such as Omicron, while credibly keeping the public finances under control. Finally, a third rule will ensure public sector net investment does not exceed 3% of GDP on average over the forecast period. This rule will allow the government to deliver on our ambitious plans for investment over this Parliament, with the highest sustained levels of PSNI as a proportion of GDP since the late 1970s. Within this rule, we're delivering on plans to invest over £600 billion in gross public sector investment over this Parliament to spread prosperity across the UK. The £4.8 billion Levelling Up Fund is part of this, an unprecedented investment package of £5.7 billion for 8 English city regions to transform their local transport networks is also part of it. And on top of these commitments, the UK Infrastructure Bank is now open for business. It is expected to support more than £40 billion of infrastructure investment. Crucially, this rule also mitigates the risk of increasing debt to an unsustainable level. Our fiscally responsible approach supports growth while keeping debt under control. Madam Deputy Speaker, combined, these rules will guide responsible decision-making. The IMF has noted that countries that have followed a debt rule have typically managed to reverse a jump in debt significantly faster than other countries, and they recently assessed the new fiscal rules have anchored fiscal policy well. Thanks to our support for the economy and early responsible decisions to strengthen our public finances, in their October forecast, the independent OBR confirmed that these rules were met. The current budget is in surplus, and underlying debt is forecast to fall in the current target year, 2024 to 25. These rules will guide fiscal policy for at least this Parliament, and will be reviewed at the start of each Parliament to ensure they reflect the economic context and mean that we can deliver for the British people. In addition to the rules in this Charter, we will go further, becoming one of the first countries to formally consider the broader public balance sheet in our management of fiscal policy. And the OBR will now publish broader measures, including public sector net worth, which they say provides a fuller picture of fiscal sustainability and allows for more sophisticated analysis. Madam Deputy Speaker, the Charter also retains the welfare cap in order to keep welfare spending on a sustainable path and support the other rules in strengthening our public finances. Since the cap was last set at Budget 2020, the COVID pandemic has had a significant impact on the medium-term outlook for welfare spending. So in order to reflect this and align with the updated fiscal framework, the level of the cap is being reset in line with the latest forecast. This leads to an effective increase of £10.5 billion in the cap by 2024-2025. Yes,
I'm very grateful to the Minister giving way. I actually would like him to educate me a little bit, because what I can't appreciate is the impact of COVID on welfare expenditure in the short term. I can understand why that would be significant. Why does that move forward into the medium term when one would anticipate the economy is recovering and we've got demand for people to go back into employment?
Well,
Chief Secretary.
The reality is that much of what we've put in place, and this has been a £400 billion response, will take time to filter through the economy and out the other side. And clearly we do expect some of this to taper away, but there are large parts of the package that we've had to put in place to support lives and livelihoods, which will undoubtedly take time to wash through the wider economic settlement. The welfare cap is designed to be an automatic stabiliser, but it is also partly a measure by which we can be held to account as a government, because obviously this isn't like departmental spending, it's more akin to AMI spending. It's not something where we can manage it in the usual way, and so therefore it's quite important by setting this cap that we give ourselves at least a benchmark against which our performance in managing those pressures can be measured by the end of the forecast period. It is vital, I think, to ensuring that we have a welfare system which provides fairness and accountability to both the taxpayer and to this House. Madam Deputy Speaker, the updated Charter delivers on our commitment to budget responsibility in a way that is appropriate to our current circumstances. I understand very well the concerns honourable members may have about inflation and rising prices, and we've already introduced more measures to put money into people's pockets, from increasing the national minimum wage and cutting the universal taper rate. Although we've had to take important steps to protect the NHS and safeguard our economy, as my right honourable friend the Chancellor said at the budget, my goal is to reduce taxes. By the end of this Parliament, I want taxes to be going down, not up. We want to reward innovation and hard work, as well as the sacrifices of the British people over the last 2 years. Our plan for stable public finances in this Charter puts us in the best possible place to achieve this goal and to stay true to our Conservative ideals. And I believe honourable members tonight have a clear choice: to vote for fiscal responsibility, a credible path back to sound public finances and a stronger economy for the British people, or to let slip the anchors and leave our economy vulnerable and adrift. This Charter balances flexibility to support the economy and our stated manifesto goals in the near term with stronger public finances over the medium to long term. It supports our vision for a stronger economy, levelling up across the UK through significant capital investment, and it safeguards a stable and prosperous future, a strong fiscal legacy for generations to come. For those reasons, I commend these motions to the House.
The question is the motion on the Charter for Budget Responsibility as on the order paper. Shadow Chief Secretary Pat McFadden.
Thank you, Madam Deputy Speaker. And I'd like to begin, if I may, by echoing the sentiments from Mr Speaker earlier following the death of my right honourable friend, the member for Erdington, Jack Dromey. I knew Jack for many years from his time as Deputy General Secretary of what was then the Transport and General Workers Union, and later as a colleague and fellow West Midlands MP. He was a tough negotiator, always determined, always loquacious, and pragmatic enough to reach a deal and stick to it. And we are still in shock at Jack's sudden death on Friday. We'll miss him greatly, and my sincere condolences go to the Right Honourable Member for Camberwell and Peckham and their family. Madam Deputy Speaker, turning to the motion before us, the Chancellor announced at the time of the budget that he was bringing this vote before the House. He made a big thing of it. And at the time, the idea, we presume, was that he would come along and display his credentials for fiscal probity. He probably thought it was a clever move at the time, but it doesn't look so clever now.
Where is he?
Because when it's come to tonight's debate, he hasn't even turned up. What happened, Madam Deputy Speaker? Where is he? When he was dishing out money, he was everywhere. We couldn't move for Instagram videos and pictures of his slippers or sliders or whatever you call them. But now the crunch is coming, he's nowhere to be seen.
Yeah, exactly.
Was he worried that if he turned up tonight, he'd be asked what he was going to do on the cost of living crisis facing the country? Is he avoiding the House because he has nothing to offer people facing rises in energy bills of hundreds of pounds a year? Why is it that once again the Chancellor's done one of his disappearing acts? He wasn't here last month when businesses were crying out for support as Christmas bookings were cancelled in their thousands. And he's not here again this month for what he once told us was a central plank of the Treasury's strategy. On the rules themselves, Madam Deputy Speaker, during the COVID pandemic, the Chancellor has had to borrow a great deal of money, approaching 400 billion extra. And the pandemic was an emergency situation which required emergency measures. That's true in this country, it's true right around the world. And our fiscal rules, published at the time of our conference, take account of such emergency situations, because there's no point in having a set of fiscal rules that only work when times are good. Fiscal rules have to take account of all kinds of economic weather, and the ones that we've published do exactly that. Our rules also, crucially, allow for the investment plan needed for the transition to the lower carbon economy that we know we'll need in the future. But the government's fiscal rules before us tonight do neither of those things. Indeed, when you look at what's happening in the economy right now and what families around the country are facing in the real world, you have to wonder what the point of this exercise is. Did the Chancellor really think that tabling a motion like this was going to take attention away from the fact that he's imposing the highest tax burden on the country for 70 years? Yeah. The Tories have become a high-tax party because they are a low-growth party. Yeah, exactly. They are asking the British people to stump up the cost of their economic record, not for the 1 or 2 years of the pandemic, but for the past 12 years. Exactly. And projections from the Bank of England don't look any better, with forecasts for growth of around 1% in 2024. Does the Minister really think that this kind of resolution means people aren't going to notice or remember that the Prime Minister and the Chancellor have driven a coach and horses through one of their central manifesto promises on tax with the forthcoming rise in national insurance? Or is he trying to cover up for the fact that as families face a cost of living crisis with steep rises in energy bills, he's got no plan to help them? Well, Madam Deputy Speaker, he may not have a plan, but we do, and it was set out yesterday by my honourable friend, the Shadow Chancellor. A plan that would offer £200 off bills this year for every family. It would give a further £400 off bills for those with the lowest incomes. It would help the energy-intensive industries on which so many good jobs rely, and it would be paid for in part by a windfall levy on the companies that are making the most money out of this huge spike in gas prices. It is fair, it would help the poorest most, and it is fully costed. That's what people need right now, not a reheated political stunt thought up by George Osborne a decade ago. And you have to wonder what the conversation was that thought this was some great political idea. What did they say when they were sitting around in the Treasury? We've borrowed £400 billion. We're putting taxes up to levels not seen since the 1950s. We've wasted billions on failed programmes and dodgy contracts, but let's have a parliamentary vote to show that we're really fiscally disciplined. Exactly. It won't wash, Madam Deputy Speaker. People are seeing through this. You don't have to take my word for it. Only today, the head of the National Audit Office drew attention to the level of waste that this government is presiding over. He wrote, and I quote, "Many of the interventions carried out by government are either not evaluated robustly or not evaluated at all. This means government has little information in most policy areas on what difference is made by the billions of pounds being spent, and that only 8% of major government projects had robust evaluation plans." 8%, Madam Deputy Speaker. Perhaps that's not surprising when we've seen £3.5 billion worth of contracts handed out to businesses run by contacts of the Conservative Party. Or, as the Minister and I debated just last week, £17 billion in extra cost for the taxpayer that the government casually legislated for last Wednesday night to pay for their own mistake in messing up the reform of public sector pensions. Where's the commitment in these rules to transparency, value for money, proper procurement practices? Did they forget to include those bits? Or where's the commitment to tackling the levels of fraud which has been exposed in government lending schemes? Where's the commitment to control the Prime Minister's pet schemes? How much was spent on the Prime Minister's idea of building a bridge between Scotland and Ireland before the project was abandoned? Now, the Chancellor should have known. The Prime Minister's got form. He couldn't even build a garden bridge over the River Thames, let alone a bridge across the Irish Sea. Mind you, I'm happy to give way.
I'm always glad to hear that bridge mentioned, because I did a second-year geography project at high school that could have told him it was a terrible idea. But would you agree that, in that this was an infrastructure project for the people of Northern Ireland and for Scotland, that we should get the money that was committed to that?
Well, I'd like to know how much was committed to it, which is what I hope the Minister clarifies while he's wrapping up and telling us about fiscal probity. But in the spirit of solidarity, Madam Deputy Speaker, I do have some sympathy with the Chancellor these days. It can't be easy when his tax policies don't even have the support of his own Cabinet colleagues. The Leader of the House has made his views known. He's told all and sundry that he wants the tax rises coming in April to be cancelled. And the Prime Minister has been too weak to do anything about this open breach of Cabinet discipline. Is it a free-for-all in Cabinet nowadays? Does every Cabinet member get to have their own tax policy? Have all the leadership campaigns destroyed whatever collective discipline there might once have been? And the former Brexit Secretary, who's not with us tonight, he's even taken to using our argument about this government resembling Ted Heath more than Margaret Thatcher. I know that's not how the Chancellor wanted to be remembered. He wanted to be regarded as a tax-cutting modern monetarist, a worshipper of the true Tory faith. But the real truth is, you can't stand up and give a budget which imposes the highest tax burden since the 1950s and then issue a disclaimer at the end of it. It's just not credible, it won't wash, and neither will this resolution today. People want help with what they're facing now. The impending squeeze on family incomes in this country is going to take a battering ram to people's standard of living. It's not just global factors, it's also about years of regulatory neglect in the energy market that created a whole host of small energy northern rocks that have now had to be bailed out, and it's also about the choices made by this government through tax rises. Yes, there are global factors in the energy market, but the crisis has been made worse because of decisions and choices made by the government. We have published a plan to help people. This is a changed Labour Party coming up with real answers to a real cost of living crisis faced by families today. And we are facing an exhausted Conservative Party that's run out of answers and has sacrificed forever the mantle of being the party of low taxation. And perhaps there's no greater evidence for that weariness, Madam Deputy Speaker, than the fact that on the question households throughout the country are most worried about how they're going to pay the bills this year, the government has said nothing at all. Thank you, Madam Deputy Speaker.
Sir John Redwood.
Madam Deputy Speaker, let me return to the subject of the debate, the Charter for Budget Responsibility. I will not follow the opposition into a debate on the general state of the UK economy, which I'm sure we will have other opportunities to discuss. I see this, Madam Deputy Speaker, as the Maastricht Rules tribute debate. Every year, under the Maastricht Treaty, whether it was Labour or coalition or Conservative governments, we used to have an annual debate, and we had to look at the two fiscal rules, which of course both came from the European Union. Rule 1 was that your budget deficit had to be 3% of GDP or less, and Rule 2 was you had to either be below 60% of GDP with your state debt, or you had to show how you were going to get down to 60% of GDP with a mixture of spending cuts or tax rises. The UK normally favoured the tax rise route rather than the spending cut route. And this was, of course, characterised by the opposition parties of the day, once the Conservatives or the coalition was in office, as austerity economics, although they would never accept that the cause of the austerity was the rules designed in Brussels. And they would point out, when I made this point, that, oh, well, of course, because the UK is not a member of the euro, there aren't the same penalties imposed if the UK fails to comply. But the fact was that the whole UK economic machine, bank and treasury and officialdom, believed these were very serious commitments, and they believed that as they were treaty commitments, the UK had to keep to them. So when we finally got out of the EU, I was one of those voices saying to the government, let's scrap all that. Let's not have to have those Maastricht tribute debates, although I think we had one even after we'd left. And let us have our own UK framework. And that is what we should be debating tonight. And the government has come up with this Charter of Budget Responsibility, which I welcome. But when you read its detail, it has a familiar ring to it. What are the two main rules in this charter? It is that we must keep the budget deficit down to 3% or below. It's been repackaged in relation to investment, but it is basically the 3% Maastricht budget deficit rule. And then the second rule is that by the third year, debt should be falling as a percentage of GDP. Well, of course, our debt is well above 60%, and it's going to be quite a long time before we get back to 60%, if at all. And so it's now built into the framework as a regular item, a regular review item, although it does have that extra twist that it's a 3-year average, so it gives a bit more scope for flexing things. I think we can do better than this, government. I think we could come up with an economic framework geared to the modern needs of an independent country. And I would like to suggest that our charter should embed two great aims of economic policy. The first aim it should definitely embed is controlling inflation. Now, of course, it's right that we have a so-called independent Bank of England, although this House regularly changes the rules and shows that it's actually in charge of the Bank of England. But we have a so-called independent Bank of England who's charged with the duty of keeping inflation down to around 2% on average, and I have no problem with that as a target. But I think the government needs to adopt that as a target as well, because as government ministers must well know, you can't do all of the heavy lift by monetary policy. You can't do it all by interest rates or by quantitative easing. You also need to have a sensible fiscal policy. And above all, the government, which controls such a huge chunk of the economy, needs to manage its own affairs well in terms of productivity and sensible real wage growth and so forth, and has a duty to follow an anti-inflation strategy on the public sector directly under its control, as a backup to what the bank and the monetary policy is trying to do. So I think we should embed the inflation policy more firmly into the Charter, and that the Treasury should have to tell us how they are contributing to controlling inflation. It's going to be very topical over this year, because very clearly inflation is considerably above where we would all like it to be, and there's no immediate sign it's about to drop down, although I think it will drop down towards the end of the year unless policy is particularly foolish. And then the second criterion or objective I would put in is a growth objective. I think Labour made an entirely fair point to say that what matters is growth, and the faster the growth, as long as it's not inflationary, the faster the growth, the more you will solve your deficit and debt problems. Our economy and our figures are incredibly sensitive to the growth rate. In the first half of the current financial year, we had very fast growth. It was a recovery phase. Things were going fairly well from the COVID lockdowns. And as always, the OBR and the Treasury completely misjudged what favourable impact growth has. And so they overstated the deficit just for 6 months, the first 6 months of the year, by a whopping £50 billion. The deficit tumbled by 50 billion more with no tax rises. But there was a huge tax rise. It was called tax on growth. And more people went to work, more people earned higher wages or bonuses or salaries. More people spent more money, and so there was more VAT. So income tax receipts, VAT receipts, and other receipts in the economy greatly outperformed the OBR and Treasury forecasts, demonstrating that if you can go for growth, you will make much better progress on the debt and deficit, which you need to do, than if you go for austerity economics, slowing the economy with tax rises and with too abrupt a monetary deceleration. So I would urge the government to look again at whether they can improve on the objectives in this charter, and to reflect on it, and to see how an independent Britain can have a growth policy. Because if you then, as a government, established a growth target, you wouldn't always hit it, but you could establish it. It would start to inform the actions of every government department that has a bearing on the strengths of our economy and new jobs and all the rest of it. And that is what we want. We want a Whitehall that's positive about Britain, not one that's trying to hold it back. We want a Whitehall that thinks that Britain can achieve things, can invest here, can have more jobs here, can substitute for imports, rather than a rather negative Whitehall saying, oh gosh, you know, there's too much borrowing, what can we cut, what can we tax, what can we stop? And we want less stopping and more positive going. We want more ability generated by a growth policy to show that an independent Britain can produce more of its own energy, can grow more of its own food, can catch more of its own fish, can make more of its own PPE, can make more of its own medical requirements.
I've got to say that speech would perhaps have done even better with Jerusalem on in the background, but he speaks about growing more food. Can the right honourable gentleman tell me who's going to pick that food from our fields?
Well, it will be picked by people paid decent wages, and if it requires wages to go up a bit, I have no problem with that, and it will also be picked by the growing mechanisation of agriculture. Our agriculture isn't as fully mechanised in a lot of farms as it's possible to do when you have better capitalised farms who have been growing more food elsewhere. So again, you know, how pessimistic. Why is he not proud of the United Kingdom or Scotland or wherever and think that we can achieve more and do more? Why do we always have to be stopping people doing things and saying that nothing is going to work? And so let's import all our vegetables from Spain, let's import all our flowers from the Netherlands, let's import all our energy from Russia or Germany or Netherlands or wherever, because we're not able to do it here in Britain. It is just not good enough. We have this huge opportunity. We have a very talented people. We have many natural resources. We have perfectly good temperate climate for growing most of our own food. So government, get on with it. And having a growth target would help energise a Whitehall that still seems to be very disappointed in the country it's trying to govern and seems to be trying to hold it back. There's then one other point which the Chief Secretary mentioned in his remarks and is mentioned briefly in the text we're debating tonight, which intrigues me. And it says that they're working on balance sheet items, but they haven't yet got them to a state of development where they can share them with the rest of us. Well, I mean, how long does it take? And why is it that the officials of the government don't know what the asset and net asset position of the country is? Indeed, I think there are some figures that you can get from public sources that show we do have some guesses about all that. But isn't it rather important that when we're debating the state of the nation's finances, we understand the balance sheet as well as the income account, and that we know whether the public sector is adding value and long-term wealth or not, and if so, why don't we claim some credit for it? And if it isn't doing enough of it, we need to ask the difficult questions about the wisdom of the investments and the productivity of the schemes and all the things that go in to make that a success. And I did ask the Chief Secretary a balance sheet item, and I think it does actually make a difference if you've bought in your own debt, because you owe the debt to yourself. And I'm not asking them to do anything imprudent, and I understand why we've gone through this rather tortured process, as has the European Central Bank, as has the Federal Reserve Board, as for many years has the Bank of Japan. But we shouldn't then fool ourselves into thinking we've got a worse problem than we've got. The fact is that all these countries and currency areas spent a lot of money and created a lot of money to buy in debt over the pandemic. And we've got away with it, with caveat, we got a little bit too much inflation. But that debt is purchased. It is now both an asset as well as a liability of the state. So it is wrong to think that it's just a liability. And the new argument that, oh, well, we owe the Bank of England, and if the short rates go up, we owe the Bank of England more interest and so forth. Yes, but they get the receipt. If you want to do the transaction, the Treasury pays the bank, but the bank can pay the Treasury back because the Treasury owns the bank. If I'd bought in my mortgage from a mortgage company, I would probably just forget the whole thing. But on sort of Bank of England and Treasury logic, every month I would pay interest to myself because I still owed the mortgage, but then I could take that money back and spend it because I own the mortgage company and it was no longer a proper debt. So I think one has to just understand that something different has occurred with quantitative easing. I don't think you should carry on doing it. I think it is normally very inflationary and very dangerous. But I think in the strange circumstances of a COVID lockdown, where a huge amount of demand and activity had been taken out of the system, you could actually get away with it. It was right to do it. I supported the government and praised them at the time for the amount of stimulus they offered. That is gone. We now need to have sensible finances, and in order to run it well, I recommend very strongly a really firm inflation target, because inflation is a little bit too high at the moment and needs to be taken very seriously, coupled with a much more optimistic growth target, because that is the way to grow the balance sheet and get the debt and deficit down.
SNP spokesperson Alison Thewliss.
Thank you very much, Madam Deputy Speaker. First of all, I would like to extend my condolences to colleagues in this House on the loss of Jack Droney. My condolences to his family and to his friends, and I know how much you'll be missing him because he was such a brilliant member of this House. I now want to just say how nice it is to see the Chief Secretary to the Treasury, and I'm here again in place of the Chancellor, because it would seem that when the going gets tough, the Chancellor goes missing, or at least to California. I'm not quite sure where he is today. I'm sorry we're not seeing him, because I looked back at the previous statements when these were made to the House, and it has always been the custom that the Chancellor comes to give these statements. So it is disappointing that while he talks big at the budget, he disappears when it comes to these statements. No one is denying, Madam Deputy Speaker, that these have been very trying times over the past 18 months, and that all governments around the world have done. This UK government has spent big to try and get us out of the pandemic with as little scarring as possible. And fiscal policy provided more resilience during the pandemic than we've seen in recent memory. But as we've seen from the emergence of Omicron, and as I have said repeatedly in this place, COVID is not done with us yet. We are still facing considerable challenges and a period of uncertainty, so why would the government want to tie its own hands by setting itself some new rules? Well, as we've seen from Westminster Tory governments in the past, it looks very much like the reasons for a move back to austerity are ideological rather than economically sound. And if the honourable member across the benches also opposes austerity, though for different reasons, cutting support too soon is a really big risk for our economy, particularly when the UK is facing a 4% expected reduction in GDP due to Brexit, twice as much as the scarring expected from the COVID pandemic. And the OBR have said that the Chancellor has left himself with very little fiscal space. Richard Hughes told the Treasury Committee that just a 1% rise in interest rates could easily wipe out the Chancellor's headroom. And if we look at the OBR report, it's clear that the Chancellor has already missed all 4 of the existing legislated fiscal targets. To quote from the report, the fiscal mandate was missed by £274.7 billion, 13.1% of GDP. The supplementary debt target was missed by 12.5% of GDP. Spending subject to the welfare cap is on course to exceed the legislated cap in 2024-25 by £7.9 billion, and to exceed the cap plus margin by £4.1 billion, more than in March 2021. And the legislative fiscal objective is on course to be missed by £46.4 billion, 1.7% of GDP. So in the face of missing all of these targets, what has this government done? Well, Madam Deputy Speaker, they have of course set themselves a bunch of shiny new targets instead, to which the OBR has said, interestingly, in our central forecast, the proposed fiscal mandate in all 3 supplementary targets are more likely to be met than missed, which does lead us to wonder, Madam Deputy Speaker, whether this is yet more sleight of hand by this government. If they can't meet the old targets, but they can meet the new targets, something smells pretty fishy to me. The targets the UK government sets itself are also on a 3-year rolling target, which, if you're cynical, Madam Deputy Speaker, you could guess there's a bit of an incentive there to game those targets. Richard Hughes of the OBR outlined to the Treasury Select Committee that the risk of having the target for it is to fall, that there could be an incentive to get it to rise in the first 2 years, so you can get it to fall then in the third. With this UK government, Madam Deputy Speaker, little would surprise me. And the rule to restrict government investment seems absolutely bizarre. How can the Tories claim that they want to level up while squeezing spending? It's going to have an impact on already woeful growth and productivity. The UK lagging behind other nations with no real plan to get back out of it if these rules are to be believed. Moving to the welfare cap, Madam Deputy Speaker, we can see yet more of this sheen, but this policy and the way that it looks in the papers rather than how it actually works in practice. Yeah. Talking tough instead of supporting those who need it most. And as with so many things this government does, it is all just smoke and mirrors. The OBR points out that the welfare cap has been raised each of the 4 occasions it's been substantively reset, twice under the Chancellor Philip Hammond in autumn 2016 and autumn 2017, and twice under the current Chancellor in spring 2020 and in this budget. And if we look at page 158 of the Red Book, the UK Government has moved job seekers' allowance, state pensions, universal credit payments to job seekers outside of the scope of the welfare cap. So yet again, if the government doesn't like the figures, it simply changes the rules. The UK says as well, if the cap is breached, the cap will only be breached if at the point of formal assessment, spending within scope is forecast to be above the level of the cap and margin for any reason, and they will give it a nod through in Parliament if they breach the cap. Well, who would again vote against that? Madam Deputy Speaker, it's an entirely false narrative, and it doesn't actually even meet the needs of those who depend on social security, which should be the real priority here. The UK Tory government were happy to take money from the poorest families to appease the right wing of their party, to get a cheap headline, and they're happy to do so again during the worst cost of living crisis we've seen in our lifetimes. And all this talk of the rules the UK government sets itself in order to have the sheen of fiscal responsibility is about a million miles away from the reality of life for so many of our constituents right now. Madam Deputy, our constituents are facing a cost of living crisis. According to the Office for National Statistics, 2/3 of people have already said that their cost of living has increased in the last month. And polling by YouGov this morning reveals that 33% of people are worried about their energy bills rising by more than they can afford. There are 3 main drivers of this crisis: energy price rises, general inflation and tax rising, culminating in the prediction that households are expected to experience the worst rise in living costs in a generation this year. Paul Johnson, Director of the Institute for Fiscal Studies, said that the combination of substantial tax rises and big increases in prices, particularly energy prices, will be a larger shock for households and average earnings than anything at least since the financial crisis, and possibly for a long time before that. Household energy bills are likely to increase by more than 50% in April when the government's cap on bills is lifted. Investex suggests that the price cap will raise by 56%, pushing the average bill from £1,277 to around £2,000 a year. This will disproportionately affect those at the bottom end of the income distribution, who spend a larger proportion of their income on utilities and food. It will have a much bigger impact on discretionary spending for this group. The FT estimate that the rise would reduce family discretionary spending by nearly 7% for the poorest household, almost 4% for people in the middle of the income scale, and only 2% for the richest. Combined with this, the Federation for Small Businesses have pointed out that the impact on small and micro businesses with the increase in energy costs. Those businesses are not inside the energy cap. These small businesses may well then have to pass these costs that they are facing onto their consumers, again driving up the cost of living. If you imagine a small corner shop, Madam Deputy Speaker, where prices are already often more expensive than they would be at a large chain supermarket, if that shop is then facing increased fuel bills, where is that cost going to go? Yep. It's going to go onto the prices at the till for those consumers who depend on that local shop. And in another of Brexit's great rollbacks, the Prime Minister said in 2016 that one of the great benefits of Brexit would be the UK's ability to cut VAT on energy bills. Now, he says, it's a bit of a blunt instrument, and you may end up cutting fuel bills for those who don't need the same help. Well, many people, Madam Deputy Speaker, many people up and down this country in all of our constituencies are crying out for that help, while this UK government are sticking their fingers in their ears. Rises in electricity prices will happen alongside planned increases in tax, which are already impacting squeezed families. The Chancellor is presiding over a £12.7 billion increase in national insurance at a time when incomes are already stretched. This is an average of £400 per employee, a tax on jobs at the very worst possible time. And an increasing number of Tory backbenchers, including, I understand, the Leader of the House of Commons, want the Prime Minister to scrap it. If the Treasury bench won't listen to me, they would at least listen to some of their own. And on top of this, all income tax thresholds and allowances are to be frozen, bringing £1.6 billion into the Treasury coffers. The Chancellor often likes to point out that this affects those higher income taxpayers, and while it is obvious that it will affect them by the greatest absolute amount, as a proportion of income, there is no doubt that poorer families will feel the effect of this policy as it eats further into diminishing disposable income for those that had any money to spare to begin with. Madam Deputy Speaker, prices are rising faster now than at any time in the past 10 years. Goldman Sachs estimate that a 6.8% prices in April, even if the government offsets the increase in energy bills. The forecasted increase in inflation is much larger than the expected increases in earnings and pensions, even factoring in the 6.6% rise in the minimum wage for those on the higher rates. Benefits are to increase in April by 3.1%, but that's a real terms cut in income for universal credit claimants, even when offset by the most conservative of forecasts of inflation. Madam Deputy Speaker, this has all the hallmarks of a crisis, and it's a crisis which lies on the doorstep of the Chancellor and of this UK government. The people of Scotland didn't vote for this crisis. They didn't vote for this government and this increased cost of living. They want to see action to protect them at the most difficult time that all of us are facing. Ordinary families are bearing the brunt of a cost of living crisis, where the Prime Minister claims he can't get by on his £157,000 salary, living in a flat redecorated with Tory donor cash. The UK has the worst levels of poverty and inequality in North West Europe, and it's clear that action must be taken now, or the Tories will push millions more into hardship. Rather than pockling the fiscal rules to get a good headline, the UK government must introduce an emergency package of support, introducing a low-income energy payment, matching the Scottish Child Payment across the UK, reversing the £20 a week cut to universal credit, raising the minimum wage for all to a real living wage, and statutory sick pay to the real living wage level of £9.90 an hour. Rather than a series of meaningless targets which shift whenever it suits the government, building an economy where citizens can get through the winter without relying on food banks and fuel banks ought to be the true definition of fiscal responsibility in government. The SNP benches will be voting against both these motions tonight.
Richard Fuller.
One of the primary reasons that a parliament was established was to protect property owners from the excessive claims of the state. Over the last quarter century, this is a duty in which successive parliaments have spectacularly failed to fulfil. Encouraged by benign trends and encouraged by a media with an irrepressible pressure to spend more and take on more responsibilities, and hampered by a globalization of capital that has moved the ownership of property offshore and therefore harder to tax, the political class in this country and this Parliament appears to have lost any sense of the responsibility to pay for what you spend. As speakers have said in this debate already, the UK has now the highest peacetime tax burden since World War II. The UK government has direct debts of £2.6 trillion. In addition to that, there are unfunded pension liabilities and other off-balance sheet liabilities that take that total closer to £4.6 trillion. And yet, speaker after speaker, and even in this debate, Madam Deputy Speaker, says, spend more, spend more. Since 2009, the Bank of England has been printing money, and notwithstanding the very clear points of my right honourable friend, the member for Wokingham, that amount of £895 billion of quantitative easing is a potential debasement of the currency. And even though it may have this interest rate, one hand to the other hand, between the Treasury and the Bank of England, there is long-term understanding from capital markets that if governments and sovereigns are quite happily able to print their own money, that those who wish to lend money in the future will ask for a higher interest rate to cover that risk. And the UK governments over the last 30 years have benefited from at least a 30-year decline in the yield curve. And perhaps we've grown used to an expectation that a lender will, in real terms, actually pay for the privilege of funding public expenditure. Now, to me, this is a very precarious financial situation for the UK government. So what are our prospects? Now, the honourable member for Wolverhampton South East, who led for the opposition, talked about economic growth, and the honourable lady, the spokesperson for the S&P also spoke about growth, somehow that this was the magic cure, that they had a special plan, that somehow the United Kingdom was doing uniquely poorly. But the truth of the matter is, Madam Deputy Speaker, that economic growth across all of developed OECD countries has declined from an average of 3%, over 3% per annum in the 70s and 80s, to an average of below 2% in the period since 2000. And actually, the relative position of the UK to the OECD position is better now than it was in the 70s and 80s. So the argument that somehow there is something that the UK government is missing in its growth strategy seems to me, that other countries have found, seems to me to be an argument without foundation. I've heard the Honourable Gentleman, the member for Wolverhampton South East, make this point before, and it's a neat point. That's why I went to check the figures, and I would encourage him to do likewise. Geopolitical risks are growing, partly driven by a 50-year strategy to integrate China economically and politically into the democratic system, which is now at least in question, if not in reverse. And we should think very carefully that disengaging China and its productive capacity from the global trading system risks adding to inflationary pressures. And demand from sovereign borrowers, again amongst all developed countries, has risen from 70% of GDP a few years ago to over 200% of GDP. So that's not just the UK, Madam Deputy Speaker, that is all developed countries. And that level is a level not seen since World War II, and that puts pressure on international global liquidity that again increases expectations that this 30-year decline in yield curves may well go into reverse. And finally, I'm yet to see any evidence that all of us politicians have really learned how to stand up to the constant demands to spend more, involve the government more, as the answer to every single question that the media put to us. And I would only hope that we would pay more attention to those who have to pay for that, rather than to the credit for saying that we can solve every problem. Greater risks, rising interest rates, higher inflation expectations, and a political class that hasn't really focused on the need to pay for things. And that's the context in which we have the Office for Budget Responsibility's Charter, or the Government's Charter for Budget Responsibility. And it is indeed a welcome addition, because it does make some changes which I think start to confront some of these pressures. So there is an additional focus on assessing the affordability of public debt. It's a rather surprise to me that we didn't have that as a focus previously. It's added a cap on investment expenditure of 3% of GDP, and I take the good point of my right honourable friend for Wokingham that it sounds a bit like reminiscent of the European Union plans, but it does seem to me that there is a problem where you have departments bidding to the Treasury based on some expectations of and I'll use the phrase rate of return, but the return they're going to make, and a Treasury having to then stand back and be a barrier against all of those demands on its public purse. And I think the addition of this cap on investment expenditure seems to me to be a prudent addition to make. And we've added the Charter adds a new key indicator of public sector net worth. And I would again just encourage the Minister to move very quickly to let's have the details on that. I think New Zealand put this together in the last millennium, so it can't be that hard really to put it together, although I do understand that it can be misleading as well as insightful. One thing that's not in the Charter, I checked, is what are the consequences for breaking fiscal rules? This point has been made by the Honourable Lady, the member for the SNP. There is it would be nice, wouldn't it? It is good to write certain rules, but it's also good for there to be consequences for taxpayers, for governments that don't meet those fiscal rules. And that should be more than just a new rewriting of the rules. I would finally just like to make one point about long-term trends in the Bank of England. In the document, on point 320, it says, the Treasury objective in relation to debt management policy is to minimise over the long term the cost of meeting the government's financing needs, taking into account risk, whilst ensuring that debt management policy is consistent with the aims of monetary policy. I like that phrase, over the long term, Madam Deputy Speaker. That sort of hides all sorts of problems. So I thought I'd try and find the long term. So I turned to the December 2020 working paper by the Bank of England, 8 centuries of global real interest rates to see what that might tell us about their thinking, because I am concerned that the Bank of England has had a view about inflation rates, which was a little bit too benign. In that working paper from actually January 2020, my apologies, Madam Speaker, I quote, "Against their long-term context, currently depressed sovereign real rates are in fact converging back to historical trend and suggest that real rates could soon enter permanently negative territory." Ultimately, Madam Deputy Speaker, this is the big question that I'd like to understand from the Minister. Is it the expectation that we are living for the foreseeable future in an era where we anticipate that interest rates in real terms will be negative and declining? Or is that a long-term trend but will be subject to major fluctuations in the short term? Because the livelihoods of households depend much more crucially on that expectation than on other things perhaps we may be debating in the near future.
McDonnell.
Thank you, Madam Deputy Speaker. I'll be brief. The debate has roamed over more than just the fiscal rule and the welfare cap, and I won't tread in some parts of the debate so far, apart from say my friend from Wolverhampton East on the front bench, I think, has demonstrated the economic and political farce of a government that we now have. There was much the Honourable Member for Wokingham made in terms of the points about the role of the Bank of England debt. I thought that was an interesting to pursue in another debate at a later time. And the Honourable Member for Glasgow Central, I think, quite pertinently drew attention to the iniquitous nature of the welfare cap. Can I say to the Honourable Member for Herefordshire, Bedfordshire, sorry, my eyesight's going at the moment, Bedfordshire West, I thought his contribution was interesting, but I felt his definition of Parliament's role as the protection of property is something of a 17th century view of the nature of democracy that we might want to debate elsewhere. I just want to get on the record a few sentences about the welfare cap. I go back to the debates that we had during the banking crash, when there was an understanding, a popular understanding of the causes of that crash, which was the way the system was operated as a result of greed, the incompetence from the finance sector alongside that greed. In addition to that, the mismanagement of regulation of finance over decades. There's a big argument put at the time and subsequently by the parties opposite about we were in a weaker position with regard to because of our deficit at that point in time of the crash. I think it's a very feeble argument, but there is some substance to it, and I had some argument at the time that the reason there was that deficit is because we didn't have an adequate taxation policy which matched our expenditure overall. But that was for another time. But I say to the Honourable Member for Herefordshire, I can remember George Osborne ripping into Gordon Brown and others when even the concept of a fiscal rule was raised, and the attacks that George Osborne then made on the ludicrous nature of a fiscal rule that no one would ever abide by, and there would be no sanctions. So that when he was elected, appointed Chancellor in 2010 under the Coalition and brought forward the whole proposal of the fiscal rule process, some of us thought it was ripe, to say the least. However, the most iniquitous bit about that debate, I think, was the combination of the introduction of the individual benefits cap as well as the overall welfare cap. The individual benefits cap, I think, is egregious, and it has forced people into poverty and hardship, and in many of our areas impacted upon their mental health in a way which has pushed many of them over the edge, and some into even taking their own lives. That's the tragedy of that element of the cap. But the welfare cap itself, the overall welfare cap, is part of that political direction. The point has been made time and time again that austerity was a political choice. It wasn't an economic necessity. And part of that political choice as well was the introduction of the cap. After austerity was introduced, people woke up to the fact that public services were being cut on a scale that they'd not seen before It was impacted upon the health service, education, local council expenditure, and in addition to that, there were pay freezes, and in the end, because of inflation, pay cuts. And there was a reaction against that, an understandable reaction. I can remember the deep unpopularity of the coalition government in that early stages. And I think there was a cynical decision made. Well, I know there was a cynical decision made because Lord Freud, who was responsible for welfare policy and supposed welfare reform, has exposed in these recent months that there was a cynical decision made. And it wasn't on the basis of reform of welfare, it wasn't on the basis of economic management, it was to find a scapegoat. And that scapegoat, unfortunately chosen by the then coalition government, were the poorest in our society, the unemployed, the people with disabilities, and tragically children as well. I remember the language that was used, and I have to say as well, permeated many sides of this House too. Strivers as against skivers. I can remember the tales of the twitching curtain where some would stay in bed while others went to work, etc. It certainly didn't reflect what was happening in my constituency, because everyone I came up against were desperate for a job, but more importantly were desperate for a job that paid a wage that would keep a roof over their heads and put food on their table for their children. That's where the welfare cap came in. And it became, of all other expenditure, this is the area of expenditure that had to be capped in some form. And other areas of expenditure that were equally demand-led weren't debated. It was specifically because there had to be a scapegoat found. And, you know, we went back to the attitudes of almost the poor law and the workhouse. I remember those debates. I was offended by them. I was made angry by them. But above all else, I was shamed by them that this House could stoop to that level. And that's what happened, and people suffered as a result. So this welfare cap in this report associated with the fiscal rule is a base anachronism that should no longer exist. But I fear this, for as long as it exists, if as we go through this period where the economic pressures will impact upon any government, but also on the as has been said, the cost of living crisis is easy to say as a phrase, but actually there's a reality to it, because it's already causing hardship in many of our constituencies. If as we go through that, I believe this government will want to find another scapegoat, and it will be the poor again. It will be the disabled. It will be those who can't find a job or who can't get enough hours in a job to keep them out of poverty. And they'll use the same mechanisms, and the welfare cap will be part of it as long as it remains in some form of statutory form. That's why tonight I will be voting against the welfare cap, because in principle I think it's an appalling piece of legislation. I think it's proved to be inhumane in its impact, but in addition to that, I think it will be a tool that will be used and a weapon that will be picked up again to attack working class people that I represent. And that's why I want on the record tonight why I oppose it and will continue to oppose it until we hopefully secure a government that will throw out this abysmal piece of political weaponry against working class people.
David Linden.
Thank you very much, Madam Deputy Speaker. It's a pleasure to follow the right honourable gentleman from Hayes and Harlington, with which I agreed with everything that he said. I think he's right as well to take aim in particular at the coalition government. I note tonight that there are no Lib Dem MPs here to defend their role in that government, in particular with the things like the welfare cap. But in the interest of time, I'll focus my remarks largely on the second motion before the House tonight. But I do think that this government will at some point have to confront the blatant contradiction of its mantra around budget responsibility and fiscal discipline and how it correlates with its new buzzword, levelling up. Because if I'm to understand the government right, levelling up either means giving more money to the traditional red wall seats at the expense of the traditional Tory Shire seats, something the government denies and has denied off the back of the North Shropshire by-election and the by-election in Cheshire and Amersham, or it means spending new money in old red wall seats, which somewhat flies in the face of the fiscal discipline this government likes to talk about and we heard from the Chief Secretary to the Treasury, because you can't have both, and that is a fact that the Chancellor will need to realise, especially when he has one eye on a Tory leadership race against the Foreign Secretary. Now, I don't know where the Chancellor is tonight. He's maybe planning his next series of Instagram posts. But I thought it was interesting that the Honourable Gentleman Member for North East Bedfordshire spoke about the importance of adhering to these fiscal rules once they're set in place. I don't know, perhaps the government approaches fiscal rules in the same way that the Secretary of State for Northern Ireland does, that it's okay to break rules in a very limited and specific way. But I rise tonight to primarily indicate my opposition to the principle of the welfare cap, and will also vote against that motion tonight. But as well as the welfare cap, we are being asked this evening to vote on a charter for budget responsibility. But I'd like to see the government bring forward a charter for societal responsibility, because it's clear that the contract between Whitehall and the most vulnerable people in my constituency has been eroded to the point of breaking down entirely. And yes, there has been limited devolution of social security powers to the Scottish Parliament, which excites me and gives me hope for the future, not least because we can implement social security policies that are underpinned with dignity, human rights and respect. But the inescapable and constitutional reality is that 85% of welfare expenditure and income replacement benefits remains the responsibility of this institution and the British Government. However, as constituency MPs, we know that an arbitrary cap on welfare is neither useful nor is it adequate, as has been demonstrated by previous breaches of the cap. Quite simply, the welfare cap does not address the fundamental and clear structural issues which leave people relying on social security, issues such as low pay, gender inequality and wider labour market inequality. But I understand that it's easy for me as an opposition MP to stand up tonight and pan the British Government's policy agenda and not to offer solutions as to how we can strengthen the social security net. So I want to set out where the SNP would do things differently. For a start, I think the British Government needs to spend less time obsessing with the ideological plaything of a welfare cap, but instead to fix the fundamental flaws in our social security system. Straight away and at the stroke of a pen, it could end the sanctions regime and conditionality. It could abolish the 5-week wait for universal credit. It could end the bedroom tax in other parts of the UK. It could reinstate the £20 uplift to universal credit. And indeed, it could extend that to 2 million legacy benefit claimants who were so heartlessly left out in the cold at the beginning of the pandemic, because those people with a disability have increased extra costs, and that £20 uplift should have applied to them too. And so when the Chief Secretary to the Treasury in his speech earlier on was talking about, putting the arms around people during the pandemic, I would remind him that a lot of people, those 2 million legacy benefit claimants, certainly did not feel the embrace of the government's hug then. But before I draw my remarks to a close, I want to focus specifically on the role of devolved governments when it comes to social security provision. In particular, I want to offer some thoughts in a Scottish context. Now, I mentioned before that with limited social security powers, Scotland is already making clear its intentions and priorities when it comes to supporting the most vulnerable and tackling poverty. One such example is the game-changing Scottish child payment rising to £20 per child per week. That equates, Madam Deputy Speaker, to an investment of £197 million and will help lift 40,000 children out of poverty in 2023-24. So absolutely, that goes some way to undoing the damage of years of Westminster actions to undermine and weaken the social security net. But, Madam Deputy Speaker, people in Scotland have to wake up to the fact that fighting poverty and inequality will only be hindered, not helped, by a government in London which is fixated on a welfare cap and removing vital financial support for those who are least well off. Because in many respects, devolution is increasingly having to act as something of a sticking plaster to mitigate the very worst effects of Tory austerity and Westminster's welfare cuts. And yes, the Chancellor, wherever he is tonight, might be a wealthy multimillionaire who thinks that £20 a week here and there doesn't make much difference. But, Madam Deputy Speaker, for my constituents in Carmyle, Carntine and Craigend, £20 is an awful lot of money. That £20 can mean the difference between cheap ding dinners or proper nutritious meals for their children, which helps fuel them to learn and grow healthily. So yes, devolution in Scotland means doing things differently, with a focus on greater free school meal provision, abolishing the bedroom tax, or indeed introducing that Scottish child payment. But there are limits to devolution, especially when it comes to lack of borrowing powers. So I believe that tonight's debate again makes the case for Scottish independence, because Scottish independence means we won't have an arbitrary cap on welfare, thereby capping our ambitions to tackle structural inequality and poverty. Scottish independence is about creating a charter for societal responsibility and looking after the most vulnerable people in our communities. And tonight's motions show that Scotland being governed from London and by London will not achieve that. And I think it was noticeable that even the Labour front bench tonight hardly made any reference to that welfare cap. So it's clear that regardless of which party is in power, that is going to be an issue for people in Scotland. And I would say that only independence can tackle poverty and inequality, which is only prolonged and perpetuated by an arbitrary Westminster welfare cap, which I will oppose tonight.
Beth Winter.
Thank you, Deputy Madam Speaker. We are here this evening to discuss the welfare cap that's referred to in the autumn budget. Introduced in 2014, it was designed to limit spending on social security, and this in itself is notable, as it reflects the Conservative hostility to properly fund a social security safety net for the most vulnerable and disadvantaged groups of people in society. The welfare cap is repugnant and regressive, and is driven by a Conservative ideological approach that stigmatises those in poverty and experiencing hardship, and does absolutely nothing to tackle the underlying causes of people's reliance on social security, which are the failures of successive Tory government economic and social policies. When it was introduced in 2014, my friend, the member for Hackney North and Stoke Newington, said in this chamber, and I quote, "Everyone in the House wants to bring down welfare spending because welfare spending is the price of government and social failure." And she also said this benefits cap is arbitrary and bears no relationship to need, as our benefits system should. She was absolutely right. The cap was also condemned by economists from the National Institute for Economic and Social Research and the New Economics Foundation. Even the OBR questioned whether the welfare cap has any meaningful impact on spending plans and outcomes. The cap covers carers allowance, disability living allowance, personal independence payments, universal credit and the winter fuel payment. It is wrong in principle to subject these to an arbitrary cap. The cap itself does not reduce the need for social security. As others have already said in the chamber this evening, we are facing a cost of living crisis. The Joseph Rowntree Foundation has estimated that a third of low-income households, 3.8 million people, are already behind with their bills, and 4.4 million households took out new or increased borrowing during the pandemic. If inflation stays at its December rate into April this year, the number of people being pulled into deep poverty would be around 200,000. Does the government believe this amounts to a negative shock? At what point does it consider rising poverty a shock? Because in the coming months, I expect, indeed I know, that many more people in my constituency of Cynon Valley and across Britain will face a negative shock. The COVID pandemic has had a devastating effect in my constituency, and it's going to be exacerbated by the continuation of this welfare cap. And that's partly why I recently actually commissioned independent research by a think tank in Wales, the Bedfordshire Foundation, on my constituency after COVID, Action for Recovery and Renewal, and the findings are absolutely shocking. In the Cynon Valley, the rates of unemployment doubled during the pandemic, and by March 2021, we had the highest rate of economic inactivity of all constituencies, not in Wales, but all constituencies in Britain, a staggering 42% of people of working age. Many of these people, through no fault of their own, are now reliant on benefits that come within the scope of this welfare cap. We've got 6,000 people on universal credit and over 5,000 still on legacy benefits. And they're also now suffering the £20 cut to universal credit. How many more are going to have to join them this year due to the government's failure to lift the minimum pay to a real living wage, end insecure work, zero-hour contracts, control rip-off energy bills, or properly invest in building sufficient, affordable and suitable housing. I couldn't visit my local Citizens Advice Bureau in Mountain Ash or the local food bank in Aberdeen and say I back this welfare cap. It is gesture politics of the worst kind, grounded in demonisation and hostility to social security recipients, the most vulnerable and disadvantaged in our society who need our support. The priority has got to be to lift incomes, reduce reliance on social security and maintain a sufficient safety net for those in need. And that is why I oppose this welfare cap.
Jim Shannon.
Thank you, Madam Deputy Chair. I would like to echo the comments of others who have... I say this very respectfully to the Minister. I want to speak on the welfare cap and I want to endorse the comments that others have made and do it from my own constituency of Strangford, and I express probably where I see the issues very clearly. I absolutely understand, to be fair to Government and Minister, the rationale behind capping the amount the state spends on welfare. You can't hold on to what you don't have in your hand, and we can't give what isn't ours to give. We do have to be responsible, but we also need to ensure that the funding we are allocating to the NHS reform and to the latest stages of the COVID battle is adequate, whilst keeping an eye on the amount borrowed, which is a way beyond belief in my opinion. I can't begin to understand. I think what the Bedfordshire referred to as hard to understand just the amount of money that has been borrowed. However, at the same time, it has to be said that people are struggling and need more help, and that's what I'm going to say on behalf of my constituents in Strangford. For many people, the COVID lifeline of the £20 uplift to universal credit withdrawal has left them in a precarious position. And I can see that. I know that. And I'm going to give you some evidential base for that, because it's all about evidential base. Others have referred to that, and I want to do the same. I know because the amount of referrals to the food bank in my constituency of Strangford has doubled. And I spoke to the guys just there last week about it, and they told me, I says, is it my opinion, or am I right in saying that the numbers of those people who are applying to the food bank this year are greater than ever before? And the answer was yes. I can see it numerically, statistically, in my office, and I can see also the hardship and poverty levels that the honourable gentleman spoke about from the Scots SNP just beforehand. I see that in my constituency, and it's because people are struggling. They are the working poor. They're the people on small wages who are finding it incredibly difficult to try and make things matter. I see families whose income has stayed the same, and yet they're facing in Northern Ireland increased costs due to the Northern Ireland Protocol. For example, just one of my local businesses. Let's give you an idea of the prices and where they're going, and where they were before and where they are now. In my town is renowned for the bargains, and they carry a range of the £1 products. The business owner informed me that his pound line range of 600 products is now ranging from £1.15 to £1.29 for bleach, for dishcloths, the things that our people need every day. That is, even the toilet rolls. These things are not a luxury; they are the essentials. And the owner informs me that he's not even made 1 penny more on these products, while his income is up because the prices are up. His profits are down as people can't afford to be buying, and that's the impact. Even in a pound a shop where the products are sold for £1 or thereabouts, the outcome is up and the profit has remained the same. That means a 50% rise in their groceries alone. Add into this a 30% gas rise, a 20% electric rise, and the problem is clear. And this is why it's right and proper from this government to review the welfare spending cap and then lift it due to the dire circumstances that working families and those who are ill and vulnerable are under. I remember who spoke referred to those who are disabled. If you're able-bodied, it's hard enough, but if you're disabled, it's even worse, and that's a fact. So I pose the question to the Minister, and I do it respectively, and the Minister knows that. It's a genuine question and not a political point. Will the rise be sufficient to make a meaningful difference to the families on the poverty line? Is the increase proposed today enough to do the job and to do it right? The cap set at the spring budget 2020 was restated because some methodological changes in 24-25 it will be 126.8 billion with a margin of 3%, and the new aim is the cap in 24-25 will be 138.3 billion with a margin of 2%. Will this be enough for those who need it, and that's the question I'm asking. I think others have illustrated that. I know that all families in Northern Ireland are feeling and bearing the brunt of the intransigence of Brussels and their refusal to do the right thing and allow us to trade with the rest of the UK. This is not a debate on the Northern Ireland Protocol. It's the effects of what's happening in my constituency, Madam Deputy Speaker. There's been no discussion can be made about people on the brink of the poverty line without acknowledging the effect of the protocol on the finances of every person who buys anything in Northern Ireland, every mother unable to purchase gifts on Alison and paying astronomical amounts for their Christmas presents for their children as they were out of delivery areas, every business owner paying for products to cover the cost of the procedures. All of these have sown into a Northern Ireland much poorer for the protocol financially and positionally as well as culturally. I support the uplift of the welfare cap. I understand. I'm not smarter than anybody else, Madam Deputy Speaker, but I understand because my constituents tell me the issue. I understand the reservations for those who don't want to borrow more and what it means to do that. But we must get our local businesses back into earning and tax-paying positions that COVID has removed, so that the wages don't make them poor and the working poor. We must enable there to be disposable income spent on the local economy and people have enough to heat their homes and clean them as well. I conclude with this comment, Madam Deputy Speaker. There's a work to be done on the economy of this nation to encourage business and enterprise and tap into the global market. But in the meantime, we must have enough available money to spend on our vulnerable and our needy. And this year has been a year where I've never seen anything quite like it, Madam Deputy Speaker. And if this measure is needed to do this, and is enough for this first step, then we in this House must take that step today. Thank you.
Dan Carden.
Thank you, Madam Deputy Speaker, and I will be brief. This debate seems to be the definition of a pointless exercise. Where there is total economic uncertainty, we're here setting out fiscal rules that, if the government breaks, they'll change next year. But I'm here to put on record and to speak in opposition to the welfare cap. I represent some of the most deprived communities in England, and this welfare cap is simply a continuation of a policy that is designed to appease those intent on demonising the least well-off. It is political weaponry of the worst order. People are struggling day to day with their costs, and there is a cost of living crisis. Something that soaring energy prices and inflation threaten to make much worse this year, next year and the year after. And so what possible sense can there be in wasting time this evening, here and now, putting arbitrary caps on the winter fuel payment, on cold weather payments, on carers allowance, on support for the disabled, on in-work universal credit or support towards people's housing costs? It is nonsense. Even the government's own OBR has questioned the welfare cap's usefulness. The government itself has broken the current cap twice in recent years, and it is left continually raising the cap and changing its scope for no other reason that it's not prudent and it doesn't work. If the government wanted to bring down the nation's welfare bill, it would focus relentlessly on tackling the causes of the cost of a living crisis, by tackling insecure, low-paid work and boosting wages, by controlling extortionate rent, by ending the scandal of rip-off energy bills that only fuel corporate profits. Instead, it chooses to waste time playing games and posturing, and it is doing it with this. The people I represent need a social security system that supports and enables them, not one that punishes them and strips away their dignity. And in these difficult, uncertain times, the government is not being serious by continuing this unworkable, arbitrary cap. Thank you.
Shadow Minister James Murray.
Thank you, Madam Deputy Speaker. Madam Deputy Speaker, today could have been a chance for Treasury ministers to come to the House and set out plans to help people facing the rising cost of living in 2022. They could have come here to offer immediate help to people now, alongside a plan to invest what is needed in the long-term future of our country. But that, sadly, is not what we have seen. Despite widespread anxiety across the country about soaring energy bills, today we have heard nothing from the government on that front. Nor, it seems, did the Chancellor reflect over Christmas on their plans to ratchet up national insurance contributions in April. Treasury ministers could have come here today to announce they won't go ahead with the tax hike on working people and their jobs, but we have heard nothing from them on that front either. Instead, we have seen ministers spend their time today defending their harmful and economically illiterate cap on investment in our country's future. Madam Deputy Speaker, Treasury ministers should be using their first outing of the new year at the dispatch box to explain how they will help with the rising cost of living affecting so many of our constituents, as my honourable friends from Hayes and Harlington, Cynon Valley and Liverpool Walton have all pointed out. If the government does not know what to do, they are welcome to use our plans. As my honourable friend, the member for Leeds West, the Shadow Chancellor, set out over the weekend, and my honourable friend, the member for Wolverhampton South East, set out earlier, our plan for energy bills would bring them down this year, partly funded by a one-off windfall tax on North Sea gas and oil profits. It is a bold and balanced package which would help everyone in the country, with a plan that is fair, fully costed, and that would help families on low incomes the most. The government could also follow our lead when it comes to the national insurance increase on working people and their jobs. As we set out in September last year, that tax hike is wrong when the burden should be borne by those with the broadest shoulders. But whilst the Conservatives' failure to help people now will cause hardship for many in 2022, it is their failure to invest in our country's future that will cause damage for years to come. Their approach today shows they have learned nothing from the failures of 12 years in power. They are not listening to business groups and economists who have made very clear how vital they think investment in our country is. And they have learned nothing from countries overseas. Even if the government gets investment up to its 3% of GDP target, we will still be at the bottom of OECD countries behind Ireland, the US and Mexico. Is that really the government's vision of a global Britain? The truth is, the government's position simply confirms that ministers do not understand what our country needs for the future. And their failure to invest has a direct impact on people's lives. Over the past 12 years, the government's failure to invest what is needed in gas storage and additional energy sources has made the jump in energy bills we face today far worse. Their failure to invest in safe and affordable housing has made the housing crisis we face far worse. And now, their cap on investment means they will fail to invest what is needed in decarbonising our economy, making the damage to our country in the long run far worse too. Ministers could have come here today to follow our lead by committing to £28 billion of capital investment in our country's green transition in every year of this decade. Our fiscal rules set out how we would make that investment in the future whilst balancing the books and getting debt falling. That level of investment is needed to tackle the climate crisis and to create jobs for the future, from insulating homes across the country to making sure wind turbines are manufactured here in Britain. But that level of capital investment would not be possible under the Chancellor's Charter. The Chancellor's Charter will cost our economy and our country more in the future as a result. So, Madam Deputy Speaker, when the case for investment is so strong, why is the Chancellor so keen to stop it? We would ask him, but as my honourable friend, the member for Wolverhampton South East, drew to the House's attention earlier, he hasn't turned up today. We wondered, in fact, where the Chancellor was, whether maybe he was in California again. But I can tell you, Madam Deputy Speaker, he's been spotted in the building tonight. He is so contemptuous of his own fiscal rules that he hasn't even bothered attending today's debate. I suspect he's realised he's called it wrong. The stunt hasn't worked, and true to form, we know that when the Chancellor finds questions too uncomfortable or too difficult, he is nowhere to be seen. The Chancellor may have thought it was clever to have a parliamentary vote to distract from the government's record of high taxes, high prices and high levels of waste. But his plan to cap investment will only make things worse by stunting the economy and trapping us further in the Tories' low-growth cycle. Madam Deputy Speaker, The Tories are putting up taxes on working people in 2022, despite energy bills being set to soar. They are spending their time struggling to defend their damaging investment cap rather than tackling the climate crisis, creating jobs and heeding calls from business to invest in the future. We will not vote, I'm just making progress, we will not vote to lock us further into a low-growth, high-tax cycle. We will back British businesses and workers by supporting the investment in the net zero growth that is needed to create jobs for the future, to fund first-class public services and to improve living standards for everyone in our country.
Thank you very much, Madam Deputy Speaker. And I would like to start this evening by agreeing with the Right Honourable Gentleman, the Shadow Chief Secretary, in his remarks concerning the member for Erdington and the great sadness of his passing at the weekend. I had occasion to debate with him on some legislation 3 years ago, and he was a man of the greatest integrity. He was one of the best of us, and he shall be missed across the House. And my thoughts and prayers are with his family, and especially the Right Honourable Lady, the member for Camberwell and Peckham, at this difficult time. Madam Deputy Speaker, it's a privilege to close this debate on behalf of the Government, and let me begin by thanking the several members who have made contributions, informed contributions, during this evening's debate. I will turn in a few moments to the substantive points that they have raised. The pandemic has left us with levels of borrowing unparalleled in our peacetime history. And without considered action, something that was necessary in the short term could easily become unaffordable in the long term. The British people look to us now for a clear commitment that we will address that threat. And as a government, we will always be responsible with their money, and once the crisis has passed, deliver on our promise to strengthen the nation's finances. The Charter represents a world-leading framework to guide us, a clear path back to fiscal sustainability, and it sets out a route to prosperity. On the one hand, we will get debt falling and rebuild our fiscal defences. On the other hand, Madam Deputy Speaker, we will support the economy to do the best of our ability and invest in the future. To do otherwise would mean failing to fulfil our own potential and denying future generations the chance to fulfil theirs. Instead, we choose a plan that will enable us to rebuild those fiscal buffers, create the conditions for a strong economy, and deliver on our historically significant investment plans. It also provides a sustainable welfare system while increasing the level of the cap to reflect the impacts of the pandemic on our society, as my right honourable friend, the Chief Secretary, set out in his opening remarks. In the plainest terms, to vote for the welfare cap motion is to vote simply to increase its level. I want to now turn to some of the substantive points made, firstly by my right honourable friend, the member for Wokingham. I don't recognise his characterisation of this debate as a Maastricht tribute debate, but I do recognise his enthusiasm for growth and his desire to target growth, and I think that that is obviously a critical element of this government's strategy. It's absolutely clear that we need to focus on greater productivity, and it is important that, as set out in our plan for growth, with a focus on skills, on infrastructure and innovation, we will deliver those key priorities of levelling up and net zero. I don't think we disagree about the importance of economic growth and productivity, but because of the actions that we took to support our economy, we have been more successful than previously feared in preventing the long-term economic damage of COVID. And in their latest forecast, the OBR revised down their scoring assumption from 3% to 2%. I'll then move on to the Honourable Lady from Glasgow Central, and her remarks were echoed in part by the Honourable Member for Glasgow East and the Honourable Lady from Cynon Valley and the Member for Hayes and Harlington. But I do want to make really clear to the House this evening that the £10.5 billion increase to the cap provides the headroom above the forecast to allow for fluctuation in cap spending, and the cap only formally applies in the year 24-25. The Honourable Lady referred to rolling rules. Well, obviously they can absorb some of the shocks and the endurable challenges that we face. But I would also draw her attention to the remarks of the Institute of Government, which says that the rationale for a rolling target is it provides flexibility should the economic situation change. I will turn now to the very thoughtful and characteristically well-informed speech by the Honourable Member for North East Bedfordshire, who set out a historic perspective but also recognises the changing macroeconomic realities globally. Madam Deputy Speaker, I would like to thank honourable members for their speeches this evening. None of us in this House take stewardship of the public finances lightly, and it's important that we recognise that we take all steps that we can to ensure that this country is set on the right course, and therefore I commend this evening's motions to the House.
Question is the motion on the Charter for Budget Responsibility as on the order paper. As many as are of that opinion say aye. Aye. The contrary, no. No. Division, clear the lobby. Motion on the Charter for Budget Responsibility as on the order paper. As many as are of that opinion say aye. Aye. Contrary, no. Tellers for the ayes, Michael Tomlinson and Craig Whitaker. Tellers for the noes, Liz Twist and Nevendu Mishra.
The ayes to the right, 309. The noes to the left, 206.
Thank you. The ayes to the right, 309. The noes to the left, 206. So the ayes have it, the ayes have it. Unlock. We now come to the motion number 5 on the welfare cap. Minister to move formally.
I beg to move.
The question is the motion on the welfare cap, as on the order paper. As many as are of that opinion say aye. Aye. The contrary, no. No. Division, clear the lobby. Is the motion on the welfare cap as on the order paper. As many as are of that opinion say aye. Aye. Contrary, no. No. Tellers for the ayes, Michael Tomlinson and Craig Whitaker. Tellers for the noes, Richard Thompson and Ronnie Powell. Lock the doors. Order. Order.
The ayes to the right, 306. The noes to the left, 54.
Thank you. The ayes to the right, 306. The noes to the left, 54. So the ayes have it, unlocked.